Hi everyone, welcome to another ShareWise webinar. Today I am joined by Mark Carnegie, the Executive Chairman and Founder of MHC Digital. Thank you so much for joining me today, Mark.
Well, thank you, Caitlin, for having me.
So just to get started, why don't you introduce yourself, Mark, and what MHC Digital is?
Sure. So I'm one of these old guys, when dinosaurs roamed the earth, and I was in semi-retirement. And then during lockdown, I'd always been curious about crypto, but I got really, really excited about it. And so as a consequence of that, I founded MHC Digital to try and capitalize on what was going on in crypto, Web3, and all of the digital asset space. Now, it's been a particularly rocky ride up and down since that stage. I've had FTX, I've had all sorts of different things. And so I misjudged just how bad it was going to be to get to where we are now, which is a sort of stable situation as best as crypto can be in terms of stable. So I look forward to talking to you about how I see the future. Before that, I'd had a career in private equity and media over a long period of time, both in Australia, London, and New York. That's my background. So traditional finance before I went crypto.
Right, okay. And to everyone that's joining us in the live webinar, feel free to put your questions for Mark in the Q&A chat box as usual below. Let's talk about the current state of cryptocurrency. So just recently we've had a massive spike up, but tell us more about it and what you see the future to be for crypto.
Okay, so just probably be crypto people on the call, and those ones I need to declare my allegiances. I'm broadly a sort of Ethereum believer, and have historically been pretty skeptical about Bitcoin. So just in terms of my religious conviction, if there's Bitcoin maxis on the call, recognize that we're going to have a religious difference of opinion. But for the general people who really don't understand crypto, the big news over the last couple of months has been this Bitcoin ETF getting launched in America that's allowed mainstream mums and dads to buy it as easily as they can buy and sell shares. And so that's brought a big chunk of new demand in, really legitimized the asset class with some people's views. Now, Vanguard, one of the big people, have said crypto's still rat poison. We don't want to have anything to do with it. So you find this really interesting thing in America at the moment where BlackRock are very much of the view that this is an asset which deserves to have place in a mainstream share portfolio, and Vanguard are saying absolutely not with us. So still an interesting time. The second thing that's happened, which is much more obscure for people, but the Ordinals blockchain got launched on the Bitcoin blockchain. And that's meant that Bitcoin, which I'd always worried about, didn't really have a purpose other than this sort of pretend digital gold thing, has gone out the window. You can use the Bitcoin blockchain for a whole series of things, and there's an enormous amount of innovation going on there. So whilst I was an Ethereum maximalist, I have to say what happened in last year with Ordinals has made me feel like Bitcoin continues to be a pretty attractive part of anybody's crypto portfolio.
Okay. And what is MHC's role in helping to, I guess, with the mass adoption of digital assets in Australia?
So ultimately, the thing that we have that other people don't have is a retail AFSL license, which means that we can give people advice, retail people, not rich people, advice about crypto. So that's the big distinction. If you want to talk to people about crypto at the moment, you either have to go to a completely unregulated non-financial person, or you have to be a sophisticated investor. You can't go to your stockbroker and ask about crypto. It's just not an asset class that they're not allowed to cover under their license. So we've got a specialty license for that. And then without getting too technical, the simple thing is crypto, as you know, runs up and down, hot and cold. So it has a huge amount of what the options traders call volatility. and also on time, at times it has a huge amount of what's called skew. And then thirdly, there's a whole series of different platforms. And what that means is that arbitrage opportunities abound in this space. And we run two funds that are really about capturing arbitrage. And we think in an asset class as volatile as this, as early on and as sort of cowboy-like, having third-party people manage your money if they understand that, if you know, options, futures, those sorts of things, if you're an average mum and dad, is a good way to trade crypto. And so we've got funds that you can invest in as well.
Okay. Do you want to tell our clients that are watching about these funds? I know you have two primary investing strategies. Is
That's
that
right. No, we've got three because we've got venture as well, but we've got two, one of which is basically effectively a enhanced yield product. So, you know, Aussie dollar denominated, try and earn 15% rather than 5% on the bank. That's one. And the second one is a thing that gives you exposure to Bitcoin and Ethereum. So it goes up and down in price, but we try and move and use options to enhance the returns and reduce the volatility in that. So if you've got the stomach to deal with the churn of up and down and your thing going down by 70%, up by 170 or whatever, then I think putting money in a dollar cost average Bitcoin and Ethereum approach is completely sensible. If you don't feel like you've got a strong enough stomach for that, then we've got another fund that does a good job of being able to give you exposure to crypto, but without all of the ups and downs, less of the ups and less of the downs.
So are both these strategies complete managed like portfolios?
Yes.
Okay. So I'm assuming for the mum and dad investors that are new to crypto, the first option that you mentioned is more suitable.
Well, it depends on whether they want a part of Bitcoin and Ethereum. I've seen reasonably grown up people say no. I genuinely believe with what the Fed's doing on money printing and the EU and the rest of the world, I do genuinely buy the argument that these things are the new asset class and I want some diversification. So it depends. If what you're looking for is just enhanced yield, then that. But if you want some small exposure to crypto, then we think our funds do a better job just purely out of the fact that there's as much volatility and there's as many strange arbitrage opportunities at the moment.
And I know you have a retail offering coming soon. Is that correct?
That's right. So basically, all of these funds have been run for a couple of years for wholesale investors, but because we've got the license, we're now about to start offering it to retail investors as well.
Wow. Okay. And you're the first in Australia to...
Well, no, somebody had it and then they got their license taken away. We're the first that, okay.
Has not gotten it taken away.
Exactly. It was a false start. Somebody threw a penalty flag.
And what about the Web3 equity fund?
So at the moment, that is for excluded investors, so qualified investors. It's got a really, really talented young man running it, who came out of Macquarie Bank, so he's got traditional finance background and stuff like that. If you're interested in talking to him about that, then I'm sure if somebody emails, we can get somebody to call you. But on that one, it's going to be harder to figure out how to do that on a retail basis. It's just more complicated. And then what we're doing at the moment is focusing on Web3 infrastructure. So building out all of the things that are going to be needed to make the ecosystem work, rather than at the sort of front end of using it for various types of things, be it.
A few people watching, they might not know what Web3 is. Do you want to give them a simplified definition?
So the way that I describe Web3, but it's not how normal people do it, is if your kids or yourself have got an Instagram account or a Twitter account or something, you might then, if I said to you, actually, I'm going to take it away from you, because I'm the gods of Meta or Facebook or whatever, I'm going to take it away. Would you pay $1 to keep your Instagram account? Right. I think most people who've worked on their Instagram account would say absolutely. And I don't think they understand that, Instagram can deplatform them at any time. So the way that I describe that is you're an at-will tenant of your social media accounts. Okay. What Web3 is about is basically saying you should be able to own that and not have it yanked by any of the big 7 companies just stealing your data, stealing your account and stuff like that. So it's people trying to figure out a plan so that the centralization of the internet goes away and people are allowed to own their own social graphs. And there's all sorts of different parts of that. The most obvious one is online gaming, people playing, Fortnite, Minecraft, those sorts of things. All of those exist within centralized ecosystems. And what's happening in Web3 is people are trying to avoid having that happen.
And how does Web3 relate directly to crypto?
It's a sort of, somebody was trying to find a better name for crypto. And so the Americans decided to use it for the sort of new generation, more arty, more whatever. But they're broadly the same thing. Okay, right. And the OG people who've been in it long enough and had to live through a couple of bear markets forget calling it Web3. We just call it crypto. It was some American marketing genius who decided crypto looked a bit scuzzy.
Right. Okay, I see. And so do you see one day in Australia crypto being used as a form of payment in just regular everyday supermarket?
No, I don't. I think it's going to be used internationally. I think the payment rails in Australia and the PayWave and stuff like that work incredibly well. So I've always been of the view that this is going to be adoption from the outside in, either international payments or developing markets where all of the payment systems don't work particularly well. Okay. And we've had a pretty good example of that in Kenya with M-Pesa and mobile money. And there's just countries in Africa where that doesn't work, and this will be better. And there's a series of reasons why it'll be better as well, because all of those countries have these depreciating currencies where effectively people are taxed by profligate governments through depreciating currencies. So I think Australian payment system works broadly pretty well. The part that doesn't work is trying to get money back to another country. If you've got relations in another country and you try and send it by the banking system, it just routinely goes missing for 3 or 4 days, and they get to sit on their interest. Whereas on crypto, you're going to be able to move the money instantaneously.
Right. Okay. And I know I've spoken to a lot of our clients. They are very skeptical about crypto because they believe that compared to normal shares and equities, it's too risky. What do you say to those people? Do you think that investing in a fund like yours carries a much larger risk?
I've always said to people, you want to have low single digit, get off zero, have some, right? But 1%, 2%, 3% of your overall portfolio, I think the idea that you put all your money in crypto is absolutely nuts. But I think also the idea that with people spending as much time as they are online, that you don't want to have an exposure to digital assets is also fanciful. And the truth of the matter is, if you've got any global share portfolio, you've had so much exposure to digital assets. You just have them by the centralized ecosystems of Google, Apple, etc. Yeah. And the truth is there's risk everywhere. Now, and what I'd say is, crypto's basically got a market cap that's bigger than the Australian share market, and it didn't exist in 2008. Yeah. And most of the really, really compelling equity returns over the last 10 or 15 years have been in the US rather than Australia as well. So I'm not saying that people should go out and go crazy on crypto, but I do think you should have a small exposure.
Yeah. I do know a few people that have gone crazy, and no, I would not recommend anyone putting all their money into crypto, but I'm not here to give anyone advice. Okay, well, Mark, thank you so much for joining me. Do you have any if our clients are interested in finding more about MHC, where should they go or contact?
Just to the website, just Google MHC Digital, but be careful because, out there at the moment, there's all sorts of scammers on the old style internet as well. So just be be aware out there, scammers everywhere, Caitlin.
Okay, thank you so much, Mark, and thank you for your time and joining us. Thanks for everyone for joining us. This recording will be posted on our YouTube channel if you'd like to revisit it.
Fantastic. Thank you.